Breaking news, Rick Santelli here live on the CME floor. CPI for the month of May expected up 1/10, arrives as expected up 1/10, very similar to yesterday. PPI, ex-food and energy, up 1/10, actually a tenth light versus expectations. Year over year, 1.8, a tenth light to expectations, and year over year, ex-food and energy is 2%. Now, here's the interesting thing. We know that all of this is about as expected. Now, if you look at the rear view mirror, no revisions once again to any of last month's. And sometimes expectations are important, but I like to know where we came from, especially CPI year over year at 1.8. The reason that's interesting is, of course, the 2%. We've been looking all these long stretches of year over years over 2%. Not there. And year over year on core was 2.1, and it moved down to 2%. I know I'm probably splitting hairs. I continue to say the interesting news about inflation isn't that it's disappearing, it's that it's not aggressively reappearing. And if we look at earnings, hourly earnings year over year, which is out today for May, that was 1.3, a tenth better than rear view mirror. And if you look at weekly earnings year over year, 1%, also a tenth better than 0.9 in the rear view mirror. Dollar index continues to slide, nothing aggressive, but it is moving a bit lower. And if I look at interest rates, they've given a little back. I guess the streak in equities excited rates a bit, and it's not a big give back, but we have fallen away from, intraday highs close to 216 and 10s back to 211. But you know what I always say, it isn't where you ride the train, it's where you get on and where you get off. The close is going to be what we want to pay closest attention to. Becky, back to you.
Rick, thank you. Steve Liesman joins us now. He's got more on this. Steve, you've been digging through the numbers. Anything else jump out at you?
Yeah, a lot of interesting stuff going on here. First of all, the owner's equivalent rent, that's the housing costs in the CPI, has been up a pretty fair 0.3 the last 3 months. And this gets to the housing segment we did in the 7 o'clock hour, which is all these millennial folks are renting and the vacancy rates are plummeting, and we see rents going up. And so that's something that's going to, this is a nice piece by Ian Shepperton this morning in Pantheon. Thinks this is going to affect the CPI down the road, not necessarily. So that's one aspect. The other thing, I don't know if you remember, we talked about this new big data in the CPI. We did a story on this. I'm not sure you were here, so I'll give you whatever. I'm sorry.
Remind me.
So the BLS, a store did not want the BLS price checkers in the store.
A major store.
A very large unnamed retailer.
Walmart.
A very large unnamed retailer.
Target.
A very large unnamed retailer. We could do this
for a while.
And so they decided to give the BLS a very large file with actual sales on it.
Huh. Well, that's interesting.
One of the potential results, write this down at home, folks, a -1.9 and a -0.8% fall in apparel prices in March and April.
Because the actual sales were a bigger decline
Maybe
than what
picking
BLS
up promotions, seasonality, too many mittens on the shelves. We don't really know the innards of that.
But the BLS wasn't measuring it as accurately as they now have the information, I would say. If you've just got a scanner who's walking in and taking, 800 price checks versus the 8 million that they gave them.
This is actual sales data. This is part of a series of stories we've been doing about the ability to prove the data using big data.